Congress just quietly handed every American over 65 a brand new $6,000 tax discount. Most retirees have no idea it exists, and some of you are about to lose it by stroke. Now stay with me, friend. This is real. It is on the books right now, and almost non-entity is explaining it the right way. Here's the thing. Buried inside the one big beautiful bill, the big tax law that was signed Dorsum in 2025, there's a marked new deduction make just for seniors. Now here's where it gets good. The IRS is even calling it an additional or enhanced deduction for people 65 and older. The numbers are simple. If you're 65 or older, you can claim an extra $6,000 off your taxable income. And if you're married and both of you are 65 or older, that's $6,000 each, $12,000 for the couple. At the end of the day, plain and simple. And here's what most people don't realize. This is not replacing anything you already get. It stacks on top. You still get your regular standard discount. You hush get the little spear carrier one seniors have always gotten for being over 65. Besides, and this new $6,000 sits right on top. According to the IRS, you can claim it whether you itemize or taking's the standard discount. Now, here's where it gets good. It doesn't matter. Now, if this is already making you rethink your tax for this 12-month, do me one small favor. Go ahead and tap that like button. And if you're not subscribed yet, hit sign, because this channel is where we kind of break down exactly these kinds of retirement moves before the deadline passes, not after. That's all I ask. Now let me show you the portion that really matters. But before we get to the trap, let me clear up a couple of questions I can already see you asking. First, the age. You have to actually turn 65 by the last day of the tax year to claim it for that 12-month. So if your 65th natal day lands anywhere in the year, even on December 31st, you're in for the unit year. But if you're 64, I'm sorry, ally, you have to wait your turn. Second, for married couples, this is per person. So actually, if one of you is 67 and the other is 62, only the 67-year-old gets the $6,000, at least until that younger spouse catches up. And here's something most people miss. A big reason U.S. Congress built up this was to ease the sting of taxes on social protection. Folks have long been frustrated that a ball of their Social Security check gets taxed. At the end of the day, this deduction is the answer they landed on, not erasing that tax, but softening the blow. Now, here's where it gets important, and I promise this next portion is leaving to change how you think about your income this year. This deduction doesn't finish forever. It's temporary. In fact, it's only here for 4 tax years, 2025, 2026, 2027, and 2028. Let me put it this way. After that, unless Congress acts again, it's proceed. To be honest, this is a 4-year window, and the clock is already ticking. You're watching this in the middle of that window right now. No doubt, I know that's a lot already, so let me make it simpleton. Think about it this way. Free money sitting on the table for 4 eld only. Basically, the inquiry is not whether it exists. The question is whether you're going to actually keep it. And that brings me to the trap. Now listen to this, because this, more or less, is the part the headline skipped. This discount has an income limit. It begins to stage out. That just agency, it starts shrinking once your income climbs above a certain line. Definitely, for a bingo someone, that line is $75,000. Here's the deal. For a married couple filing jointly, it's $150,000. And the income they're measuring is what is called your Modified Adjusted Gross Income, your MAGI. Don't let the fancy terms scare you. For most retirees, that's basically your total income for the year before your deductions come off. Your Social Security, your pension, your withdrawals, your interest, all of it added up. Here is what that means in plain English. Cross that line and the government starts taking this discount back from you. 6 cents for every dollar you go over. And if a single filer's income ascent past $175,000 or a duo's past $250,000, the whole thing disappears entirely. Poof. The truth is, $6,000 or $12,000 for a duo travel just because of one figure on your tax return. And here's the uncomfortable truth, the part that sounds almost backwards. For a lot of you, the thing that pushes you over that line is not a windfall. It's a move you made yourself thinking you were being smart. So ask yourself this and be honest. Do you actually know what your income is passing to add up to this 12-month? Not a rough guess. The real number figure, because most citizenry have no thought until the tax return is already filed and it's too belated to fix. Let me give you the 2 big ways retire trip over this line without ever seeing it advent. Surprisingly, the first one is your necessitate back down. Once you hit your 70s, the IRS forces you to start pulling money out of your traditional IRA and your 401k, whether you need it or not. Obviously, they're called required minimum distributions. RMDs and the IRS doesn't spring you a choice about take that money. Now here's what that means specifically for this new deduction. Every dollar of that forced back down counts as income, and a big RMD can shove your magi right over that $75 or $150,000 line and quietly knock you out of your $6,000 break without you ever realizing the two things were connected. The second way is something a lot of well-meaning retirees are doing right now: Roth conversions. Convert money from a traditional account into a Roth can be a wonderful long-term move. But here's the catch. The amount you convert gets counted as income in the year you do it. So, if you convert a big chunk this year, you might save yourself some tax down the road and accidentally blow right past the threshold and lose this discount today. Now, I've warned folks before about going overboard on conversions. If you've seen my video on the 6 reasons to believe twice before converting to a Roth, this is reason number 7, and it's brand new. Stick with me here because what I'm about to share adjacent is the portion most advisors are not even mentation about yet because this law is so new. Now let me paint you a real picture because numbers on their own can feel slippery. Icon a married couple. Let's call them Jim and Carol. Both are 67. Between Jim's pension, their Social Security, and a little involvement, their income lands right around $140,000. Without question, comfortable but careful because both of them are over 65. Frankly, they measure up for the full $12,000 of this new deduction, $6,000 each, sitting right under that $150,000 line. The thing is that $12,000 coming off their taxable income could be worth somewhere in the neighborhood of $1,500 to $2,500 in real number tax savings, depending on their bracket. Real money. Money for groceries, for a grandchild's birthday, for the furnace that always seems to break in January. Now watch what happens. Jim reads an article that says he should convert $50,000 from his traditional IRA into a Roth this 12-month. Sounds smart, right? Of course, but that $50,000 gets added to their income. Suddenly, their MAGI is not $140,000. It is $190,000. They've sailed right past the $150,000 line, blown clean through the phase-out, and that entire $12,000 deduction gone just like that. Actually, one move make with goodness intentions quietly cost them their break. And here's the kicker. Nobody told Jim because the conversion form and the deduction live on completely different parts of the tax return. That, friend, is precisely the kind of accident I'm talking about. In fact, now here's the good news, and I want you to tone this. It's not too late, and you're not stuck. What's more, you're not alone in feeling like the tax code is rigged to confuse you. Most Americans your age are dealing with this exact same fog. But once you can see the line, you can plan around it, and that's where the real money is. So, let me give you the moves, plain and simple. Relocation number 1, manage your changeover to the line, not past times it. If you're doing Roth conversions, the goal is to convert just enough to fill up your lower tax brackets while staying under that $75,000 or $150,000 threshold. Convert right up to the edge, not over it. Interestingly, you can spread those changeover across these 4 years instead of doing one giant one. Generally, that way, you get the long-term benefit and you protect this $6,000 discount at the same time. The truth is, you get both. Relocation number 2, and this one is powerful for the charitably minded among you. Honestly, if you're taking those required climb down, look hard, at something called a Qualified Charitable Dispersion, a QCD. Think about it this way. Here's what that does. Instead of pulling your required money out, paying tax on it, and then donating, you send it straight person from your IRA to a charity you care about. And here's the magic. Definitely, that money never shows up in your income at all. It hush counting toward your required back down, but it doesn't raise your MAGI. Clearly so, you can satisfy the IRS, support your church or your cause, and keep your income under the line that protects your deduction. At the end of the day, 3 wins from 1 move. Now, here's where it gets really important. Notice what is happening here. These are not loopholes. This is just timing. In fact, the difference between the retiree who keeps this $6,000 and the one who loses it is not how much money they have. To be honest, it's whether they looked at the number before December 31st instead of after. That's the whole game. And I have to say this clearly because I respect you too much not to. Obviously, this video is for educational purposes only. It is not financial, tax, or legal advice. Everybody's situation is separate. And before you make a one move with a conversion or a charitable distribution, you sit down with a qualified tax professional and you run your own numbers. At the end of the day, you hear me? Get it checked. Clearly, but here's what you can do this very hebdomad, and it costs you nothing. Pull out last 12 month tax income tax return. Find your adjusted gross income. It is right there near the top of the form. What's more, now ask yourself one simpleton question. Am I any place close to that 75,000 line or that 150,000 line for a couple? Because if your finale within $10,000 or $15,000, essentially 000, then every decision you make for the rest of this year matters. A withdrawal here, a transition there, even selling an investment. The truth is, here's the deal. Any of it could push you over. And here is one more thing, friend, because I don't want to just leave of absence you with homework. For most folks, the hard part is understanding this. It's guardianship track of the numbers, so you're not guessing come December. So my team and I built something to make that easy. The complete retirement budget system. It's an interactive calculator made for seniors. You put in your social protection, your pension off, your spending, and those health caution cost Medicare doesn't fully cover. And it lays your unit money icon out on one screen in nice big clear text. It comes with a ready-to budget spreadsheet and a 50-page knit English guide. No jargon, I hope. Besides, it works on your phone, tablet, or computer. Your numbers halt private to you, and it's a one-time $47. No subscription, yours to support. Here's the deal. If that would help, the link is right down in the verbal description below. And remember, this is a 4-year window, 2025 through 2028. What we're seeing is 4 chances to get this right. Then it's likely gone. Also, so the planning you do now, while you can still see the unit runway, is worth real money. 6,000 of it, maybe 12 every single year. If you forget everything else. So let me leave you with the one thing to remember. Congress gave you a $6,000 gift, $12,000 for a couple, but they hid the rules in the fine print, and your own income is the thing that can take it away. The retirees who win here are simply the ones who knew their number before the year was over. So this week, go find that number. Look at your income. Aspect at that threshold. Certainly, and if you're any place come on the line, that's your signal to make a plan before December. That's it. That's the one smart decision. Think about it this way. Also, if this opened, really, your eyes today, do me that favor. Spring it a like so more folks your age can discover it. Subscribe so you do not miss the side-by-side one. And tell me down in the comments, do you think you'll qualify for this deduction? I read every one of them. Really. And if you lack a little help keeping your numbers straight, that retirement budget system I mentioned is waiting for you in the description. Indeed. And until next clip, ally, you take care of yourself, you issue aid of your money, and you keep making one hurt decision at a